Hello dear traders, I'm Maria Stardup and this is the review of crypto analytics from fx.co. It's the 6th of February today, Monday, and in our today's review, first we will discuss the question of whether Bitcoin can replace fiat money, and then we will get to a fundamental background and technical picture of Bitcoin before the weekend, and then we will have a look at the chart for today. Let's start. We will start with an article by Paolo Greca and the discussion of whether Bitcoin can replace fiat money. So here Paolo provides an opinion by crypto critic Ray Dalio, who thinks that fiat money is in grave danger because so many central banks are busy issuing currency and people may eventually question the usefulness of real money and confidence in the central bank will decrease. However, he thinks that stable coins cannot take its place. Dalio remarked that Bitcoin has accomplished a lot in 12 years, but it's too volatile to be a viable means of accumulation or saving. In terms of the financial system, money and central banks, Bitcoin is a minor item, yet it receives way too much attention. And for him, Bitcoin is worth less than a third of what Microsoft stock is worth. And Paolo himself thinks the following. He says that Mr. Dalio gave a fairly typical viewpoint. If many people initially expected Bitcoin to compete with central banks and fiat money, it became evident after 12 years that it would not be able to perform this job. Bitcoin is still seen as dangerous and volatile financial vehicle rather than a means of exchange or payment. Of course, some owners use Bitcoin to send money over the internet or to make payments to other owners. However, it still primarily serves as an investing tool. This one point alone leads us to the conclusion that Bitcoin's value, which is determined by investors, may reach $100,000 or greater in the future. Bitcoin will grow as much as it wants if market confidence in its growth returns. And what do you think on the point? Please leave your comments down below. Meanwhile, we will get to another article and fundamental background and technical picture, the article by Artem Petrenko. So, the article was written on Friday, right before the weekend, and the cryptocurrency market and Bitcoin are entering a local phase of volatility, Artem says. The ratio of short and long positions gradually reaches parity, which provokes an impulse price movement in different directions. The asset reached 24.2 level, but the upward movement is given to the cryptocurrency with great efforts while sellers strengthen their positions. Also, it should be noted that over the past 30 days, total Bitcoin trading volumes across all crypto exchanges have increased by 66%. However, this indicator is still below the August-October levels when the asset consolidated around 19,000. This suggests that Bitcoin is just beginning to form the base necessary for a long and strong upward movement. Given this, there is every reason to believe that bears will finally seize the initiative in the nearest future, and strong labor market statistics may become one of the triggers for Bitcoin sales. One more trigger can be the S&P 500 index. As we all know, Bitcoin and S&P are in direct correlation, and Bitcoin price has actively risen from 17,000 along with stock indices. The strength index relative to the S&P and Nasdaq has accompanied Bitcoin throughout all of its local price highs updates, but the strength ratio has begun to decline over the past week. While stock indices were rising, Bitcoin began to slow down and stopped dealing with bearish volumes. The cryptocurrencies upward movement over the past 2 days was triggered by the positive reaction of funds to the Fed's decision. And we should not forget that the leading banks in the US suggest a correction in the S&P index in this year. And if the decline in indices begins in the near future, Bitcoin will lose the last lifeline that kept it from correcting. If we look at the chart, what do we see? Bitcoin is approaching the weekend in a difficult situation due to falling bullish volumes and increasingly aggressive attempts by sellers to seize the initiative. The asset once again broke through the 24,000 level, but failed to gain a foothold higher. Also, in the area from January 14th to February 2nd, we see the formation of a series of ascending lows. They were formed at 24.2, 23.8, 23.3, and 21.6. The combination of these levels forms cascades, which are the main targets for collecting liquidity before further upward movement. Meanwhile, technical indicators indicate a further decline in the cryptocurrency quotes, and most likely sellers will win back the growth due to the Fed meeting. This means that Bitcoin quotes will retest the 22.9, 23.4 area in the near term. Making a conclusion, Artem says, with a higher degree of probability, Bitcoin will continue its downward movement on falling buying volumes. The stock market will push the cryptocurrency to a further fall. Given this, we will see more active sellers in the near future. In addition to the 22.9, 23.4 area, the bears' main targets will be 23.3, 21.8, and 21.3. However, in the medium term, Bitcoin will continue to realize its potential up to $25,000 to $28,000. Okay, let's have a look at the chart for the moment. It's 6th of February today, Monday. And what do we see? We see that Artem's forecasts came true. Bitcoin really declined almost to 22,900 and even a bit lower. All of the weekend it was above 23,000, but then on yesterday it started to decline. It opened today at 23,010, and now at the moment of the publication it is trading at 22,664. So probably this is that very local correction Artem predicted. But will it stop on these points or not? We will see this week a little later. And so far this is all for today. We will see each other in our next review tomorrow. As usual, I wish you profitable trading. Don't forget to write your comments and questions down below. And till next time, goodbye.